Okay, welcome to unit number 11 in the Trading with Market and Volume Profile course. We're going to talk now about market profile day types. So, once an initial balance is established for the session or day, we can divide this into two main categories. Knowing these day types will help traders to formulate their strategies for the days based on what traders look to be in charge for the day. So remember, again, we have the two participants, the retail traders and the large institutions, which are the market movers. So if we can identify early on who is in control or participating more, then we can have a better understanding of what strategies we need to implement. So the two categories and day types that we will discuss are non-trend day types. This will be normal day and neutral day. And then trending or standard day types where we have trend day, double distribution day, P-shape, and B-shape days. So the normal day, these types of days have an initial balance that is very wide. That means large players were very active and moved the market and position in the first hour, and the rest of the day was spent trading inside of balance. These days are not very common as the name might suggest. So you can see right here we have the regular profile and split, and you can see how on the first two periods, A period and B period right here, we establish a very wide range, and then pretty much the rest of the day, just right at the very end, we almost got out of it, but we spent most of the day trending inside. So that means that the large or the other time frame participants were very active from the open and moved and positioned in the market very early, causing it to have a very volatile and wide opening. And then after that, their activity goes down, and then we spend the rest of the day mostly just trading inside of it within value. Next is the neutral day. It also has a large initial balance covering most of the range for the session or the day. It does not have strong momentum or a clear direction from large participants. On neutral days, we'll usually see a break outside of the initial balance, but then buyers and sellers are going to bring it back into value. So this goes back to the auction market theory concepts, where in this type of days, once we break above the initial balance, we are what we considered overvalue or expensive prices. So then sellers step in. If we are below value, then we're considered too cheap, and then buyers are going to step in and push it back again into value. And you can see on these days, the profile is usually going to look very just almost like a letter D. You're going to have a very just balanced with most of the trading activity happening around the middle area of the profile. Now, one important thing to note with this is, remember when we talked about the initial balance, we talked about how futures, forex, and crypto, and within futures, I would also include stocks in there because they also have their biggest activity during stock market hours at 9:30 a.m. Eastern time in the US. So for futures and stocks, it's very easy to just talk about the initial balance as the first 2 hours of the stock market, which is when we get the most trading activity. But you know, when we're talking about markets like, let me go here into our trading platform in Sierra. When we talk about markets like Forex or crypto, these are markets where the initial balance is formed at a time when there's actually sort of very little activity. Like the Forex market every day opens at 5 p.m. Eastern time in the US, and you can see that the initial balances are pretty tiny when it comes to the Forex market, because usually at those times there's just very little volumes. It's just pretty much the start of the Asia session. And if we go here into the Bitcoin market profile, let me make this blocks. Let me hide the volume profiles just so they're not too distracting for now. You can see in crypto is also pretty similar as well. You can see that the initial balances don't tend to be huge. Some days, especially like if we're near like the opening of the week, for example, etc., it might be bigger. But you can also see in crypto also, market opens don't tend to be very huge, the initial balance. So I would say, for when we're talking about Forex or crypto, you're just pretty much mostly paying attention to just the overall shape of the profile. But when it comes in futures trading, for example, this is the split session for the ES market, and you can see there's some days, for example, this was on February 6th, and you can see this was a normal day where if I split this, you can see how we had a huge opening range where pretty much the entire trading day was contained within the opening range. Okay, so this is an example of a normal day, which, as I mentioned, is actually not that normal for sessions like this to happen. And you can see it was a pretty balanced session. Okay, so I would say if you trade like S&P 500, NASDAQ, Dow Jones, those index futures on the CME, these day types are going to be the most important under those markets. You can see here another very big opening range. You can see this one right here. There's a large opening range, and we had a pretty much a neutral day here. Just a very rounded D-shaped profile. Okay, so those are examples of those markets, and I would just pay the most attention, like I said, when it comes to futures as far as this day types, which this is basically the markets that this all this theory was created for. But again, it can be adapted also into currency futures as well. With Forex, if you're looking at spot Forex, obviously that's a 24-hour market. But if you're trading currency futures like Euro on the CME, then you're going to have the same, limited schedules, and you're going to be mostly paying attention during regular U.S. market hours. Then we're going to go into what we call trend days. So trending day types, the smaller participants are very active and controlling the market, as we had a very small initial balance, and then price breaks out and trends looking for other areas of accepted values. These days usually leave singles or gaps as they have strong impulsive moves. So these areas on a volume profile would also look like low volume nodes that will likely get filled. So you can see this example. We had this extended hours session here. Then we opened for regular hours. We had just a quick dip, and then we had a very strong momentum up. And if you look at the profile, you can see we left several singles area during this breakout movements. And if we look at the volume profile, we have a lot of little high volume nodes right over here. and then in between those nodes we have low volume node areas. So then this are gonna leave very key levels to look for support and resistance at this low volume node zones, and this gap fills into the singles. So on strong trend days, we're going to have something called one-time framing. This happens when we have a series of previous TPO highs or lows that have not been retested. These are days that should not be faded, okay? So do not go against the trend. So this one-time framing, we have, for example, this day we opened on the A period, we pushed up here on V, and then we started a very strong move downwards. And you can see right here the one-time framing where we have the edge of B here, C, D, but we are not retesting this the tops of these levels, meaning every period, every 30-minute candlestick is just continuously making lower highs and lower lows. Okay, so these days you definitely do not want to try to be fading momentum. Then we have double distribution days. These are characterized by a small initial balance and market accumulates time and volumes in two main value areas. Okay, so for example here we have this day right here where we had a clear double distribution. We had an open right here. We slowly trended up, building value around this area. Then we had an impulsive move, and then we ended up building value at this top area in time. And you can see how we build this double distribution with a low volume node area, let's say, in the middle. If we look at a volume profile, you can see that actually we did not build a lot of volumes, because remember, this is time, these are volumes. So in this case, we opened, and this is the extended trading hours. Okay, so we know that extended trading hours in the CME futures are going to have pretty low volumes compared to regular market hours. So that's why we had very little volume accumulation, but then you can see we did accumulate a lot more volumes, and we have our point of control here to finish off the session during the regular market hours. Okay. This is another day. Again, these days are characterized by a small initial balance, and then we accumulate time and volumes in two main value areas. Okay, and you can see right here, this day we opened right here, came down, we're accumulating time and volume at these low areas. Then we had a breakout here, and we ended up on this top area for the day here. So we do have this low volume node area and low time area here in between the two distributions for the day. These days are pretty nice to trade on the next session as well, because you have two very clear defined zones. So then I'm going to talk about this later on when we do the strategy chapter, but then you can mark off your high volume nodes. And then let's say the next day we close right here, so we're opening around here the next day. So when we come down, we expect support at this edge of this at this ledge of this node. Or if we do break through and come down here, then we pull back, and we would expect resistance testing again the top of this high volume node, etc. So we can just play with these two zones with this low volume node area as sort of the in the not defined area where we're going to see either rejections and reacceptance into this area or acceptance into the bottom area, and then we would just be playing retests from the extreme edges over here. Okay, but we'll talk about more of those strategies later on. Then finally we have the P-shape profiles. This indicate a short covering day session where markets rally in the beginning, and then we have traders taking profits or closing out positions for a loss at higher prices, creating an accumulation of time and volumes at the top. Okay, so what do we mean by short covering? Where you can see this day started out with a rally up, then we had a very aggressive downtrend and dump. So then once we're at these areas, we're going to have traders that were short that are going to be closing out their shorts. So if you're short, the way you close your trade is to buy it back. So that means you're putting buying pressure to close out your short. Plus, we're also going to have people that might have been, that saw this dump and said, oh, these prices are a discount now. I want to start buying down here. So then that's more pressure to push this up. Okay. And so in this case, we see that we're accumulating time and volumes near the top with a thinner profile near the bottom. So that means there's not really a lot of acceptance or time spent at these bottom levels. And the opposite is going to be the B-shaped profile, which is a long covering day or session where markets sink early in the session, and then we have traders taking profits or closing out positions for a loss at lower prices, creating an accumulation of time and volumes at the bottom. Okay, so we have an example here where we have this profile. We had our market open here. We had a push up in the early hours. Then we had a very quick dump to the downside. So again, people that were long here are starting to close out and take profits near the top. This could be some important resistance level, or maybe this was the high from yesterday or last week's high. Different, parameters that we would use in order to just secure profits. So people that were long, when they close their positions, they have to sell to close the positions. So then all this is going to add fuel to the selling. And then you can see again, we had another rally. And then again, people taking profits at the tops over here. Or we also have traders that were trying to go long that are suddenly caught to the upside and they have to liquidate or close for a loss. And that also adds fuel to the selling. And then you can see we're left with a profile that has clearly a bigger accumulation near the bottom area. Okay, and we can now go into the charts and then just look at a few examples of these profiles that we've talked about. Okay, so for example, this is the gold market that we are looking at, and we have here a very clear V-shaped profile. So this was a long covering day, and if we split the profile just to get a better view, we can see how market started rallying up, and then once we were at this high levels, traders were all taking profits, covering their longs and you can see how market pretty much, we were trending up for the last few days as well. So once market started hitting these higher levels, then traders start taking profits, adding to the selling, and we have a day where we accumulated most of the time within this lower half of the profile, as you can see right over here. If we just flip back, you can see, for example, we do have days where we actually have a triple distribution. So you can see this was a triple distribution day. As you can see, we opened at the top and then we just trended down for the day, and at each price area we just accumulated some time and volumes. This was the first area, this was the second area of accumulation, and then the last area to finish the day. And you can see we left singles right here, we left singles right here as well. So low volume node areas, if we would look at a volume profile too. So those are just split distribution days. Also, this could be considered this is a strong trend day as well, because you can see how we opened right here at the top and ended up closing right at the bottom. So these are days that is very important, once you identify the strong trend, not to try to be fading this. Especially right here, you can see we pushed down, market started forming a support level, and then we just clearly break through. We almost retested it, but then again we form another support level here that was clearly broken again. So these days is very important to just position yourself accordingly with the trend and not try to fade it. Okay, if we keep looking, this is, for example, another double distribution day. We opened up the day and build time right over here. Then we had a strong impulsive move, leaving these singles, and we made another distribution right on this top area right over here. Okay, and then here you can see, for example, what I was talking about, how we can play with this as like zones. If I mark off this distribution, you can see that the next day we opened up, we came down, and we had a very nice bounce off of the edge, the bottom edge of this distribution. Then finally we did break down here, filled those singles, and then we had a bounce again to the lower edge of this, a retest, and then we started coming down into the bottom one, etc. Okay, but that's pretty much the summary for the day types that we have. Remember again that it's important, if we can identify the different day types, then that is going to help us to form our strategies and know which of the two day trader types is in control, and if we should be looking to join in on a trend day, or if we're going to be looking more for a balanced day, or a day where we're going to be more ranging, etc. Okay, so that's pretty much it for this video. I'll see you all in the next lesson.